Hi, this is Zach Meir with a weekend edition of the Bulletin Board Heroes here at Box Markets. Sunday, the 21st of November, starting with Brandshield, which remains a little on the unloved side, but at least we've had that gap higher that we had at the beginning of the month. We've held the gap around 17 pence and above that, looking for the main near-term resistance around 20 initially, maybe by the end of next month, and then going on to a 2 to 3 month target in the mid 20s, I suppose, 25, 26 pence at that February resistance line. But obviously, still a bit slow in terms of the price action there. Moving along to another slightly out of favor situation, Galileo Resources. You can see that the shares are now into deeply oversold territory, so the RSI has been below 20 on Friday. That's about the same as we were back in July, from which there was a rally, I suppose, from around 1.1 to 1.5 pence. Maybe on this occasion we bounced from around 0.9 to 1.3 or 1.4 pence if the oscillator does its magic on this occasion. Time frame on that maybe by the end of January for 1.4 or 1.5 pence, something like that. Good to see a stock which has been on the back foot start to show some signs of life. Here we've got Insig AI. We're breaking that July resistance line there around the 51 pence level and above the 50 pence area, looking for perhaps as high as the 200-day moving average at 65 pence by the end of the year. Decent bullish divergence there with the second low matched by a rather higher RSI trace, but the main thing there obviously breaking that line of resistance. Like to see an end of day or a weekly close above the 50-day moving average around 55 pence to seal the deal in terms of recovery. We've got trouble in the EU with governments forcing people to have the vaccine. Rather suggests that governments there know that COVID's here to stay and that we're all potentially in deep trouble. Current situation on Novasid is that we had that peak at 317, end of day close or weekly close above 317 could take the shares up to £5, which is the top of that broadening triangle from back in May. So looking rather more juicy there in terms of the bull argument at Novasid. End of day close stop loss back below the 50-day moving average, currently around the 2.61 level. Moving along to another COVID play, let's say, Omega Diagnostics. Here, not quite as jumpy so far, or not quite as positive so far as Novasid, but still approaching the 50-day moving average at 48 pence. End of day close above that could take us back towards the 60 pence level by the end of the year. And we've got the hard stop loss there around 40 pence, which is held basically since August. So looking rather better there at Omega at the moment. Interesting situation next. Probably the shortest chart or the briefest chart you can possibly wish to see here on the Bulletin Board Heroes. Here we had a hammer candle earlier in the week, and then a gap higher on Friday, and the shares opening at the low, closing at the high. So that candle is the strongest you can get. So one would guess that there would be further upside for Pantheon Infrastructure over the course of the next week, especially while we're above the gap there, which is around the 5.6, 5.7 pence area. So let's see if that rather weird charting actually comes into play in terms of pushing the stock higher. On to Red Rock, and we've got the right stock here, Red Rock Resources. Here we've got a situation where the shares have broken a resistance line there, one since February, and the 50-day moving average around the 0.55 pence level, above 0.55. And the 50-day line, we're looking for the 200-day moving average around 0.75 over the course of the next week or two. The latest decline backed by bullish divergence in the RSI window, so that has and did flag a potential turnaround for the shares. So looking for 0.8 or so with a reasonable degree of confidence by the end of the year. Starcom, one of the highlights of the last few weeks in terms of the small caps. Beautiful movements here, two unfilled gaps to the upside, mid-move consolidation, and then a breakout through 1.8 pence. Above 1.8, we're looking for 2.8, which is a line of resistance from the end of last year. So looking pretty sharp there for Starcom at the moment. Savannah Resources, the next play to look at, and here we just got the 50 and 200-day moving averages rising and crossing rather rising trend channel from back in, I suppose, the turn of the year, the top of the channel there, heading towards 6.5 pence. That's the perhaps end of February target, while we hold above 4 pence for Savannah Resources. Couple of stocks to go now. Interesting to read about THG in the newspapers. Apparently the company looking at its PR at the moment. Interesting as well on the technical front that the shares went lower, but the RSI is trying to push higher, so that does suggest some degree of bullish divergence, at least hitting that line of resistance around £2.13. But an end of day or a weekly close above that could give us a little bit of a rally up towards 250. 260, something like that, if you like, trying to catch a falling knife. Finishing off with the star of Friday, which was Wishbone Gold by quite a margin. Here we had gap higher, which remained unfilled. Also, we closed above the 50-day moving average at 9.75 pence. Nearly actually made it up to the 200-day line at 11.9 pence. View now is that while we're above 10.8, which was October resistance, we could head up to 14.5 or 15 pence at that July resistance line projection. So at last, Wishbone looking rather more healthy in terms of its technicals. That's it from me today. More updates from tomorrow.